And now it's time to talk about what's happening in the crypto space in the Middle East, especially when it comes to sovereign wealth funds, and also what's happening on the stablecoin ecosystem. To talk about all these topics, we're joined in the studio with Pether, the head of MENA at 3iQ. Welcome to the show.
Thanks so much, Henry.
So, Rachel, there's a lot of talks about what's happening in the Middle East with crypto. In particular, there's a big spotlight on the big sovereign wealth funds across the region. Do you believe, based on your experience in the region, that we'll see the Middle East sovereign wealth funds be pioneers in the crypto space?
That's a great question, and maybe we'll take that specifically and more generally. So starting on the specific side, if you look at the three biggest sovereign wealth funds here, so the Mubadalas, ADQ and ADIA, Mubadala has actually been active in the crypto space for more than 5 years. So they did an investment on the venture side into Midchains, which was ADGM's first regulated crypto exchange. And then they had the $500 million last year into a Bitcoin ETF. ADQ's approach has been a little bit different, but really pioneering. They actually invested indirectly, really through Further Ventures, which was essentially a carve-out, spin-off, call it what you will, of ADQ. And in my opinion, they've been one of the most impressive digital asset investment firms on the venture side in terms of investment and incubation. And they've really helped bring more institutions into this space with working with the likes of Alan Howard's WebN. I think there are a couple of challenges when it comes to sovereign wealth funds investing in digital assets. If you look at someone like an ADIA, I know they've been looking at this space for a long time, but you have to remember that these sovereign wealth funds are quite siloed. So where does digital assets fit? Is it in the commodities bucket? Is it in the currencies bucket? Is it in the equities bucket? Is it in the hedge fund bucket? And so I think once they get round that question and look at it holistically, then we'll see more coming in. I think the second piece that has been having some investors sitting on the sidelines is obviously the regulatory risk. So sovereign wealth funds know how to manage investment risk. They have very experienced investment teams, but it's the headline risk that they are concerned about, right? You look at what happened in Canada with some of the pension funds there. They went down the venture side. The two companies they invested in, FTX and Celsius. So
that caused a lot of issues at Caisse de dépôt and, of course, at the Ontario Teacher Pension Plan as well. But you mentioned regulatory risk here, Rachel. I mean, in the UAE now, we have arguably some of the best regulatory regimes that there is out there in the world, both in ADGM and VARA in Dubai. The FSA is coming up with new features as well, and so is on the non-regulated side with RACDAO. What's your view? Don't you think that can act as a catalyst to at least solve that issue when it comes to regulatory clarity for them?
100%. And I think it's also showing, I mean, it's setting the UAE aside from other countries that have had regulatory lack of clarity and uncertainty. And because so much of this is happening at home, and we're seeing it's both a top-down and bottom-up approach, right? So you're seeing this clarity from a regulatory perspective with the regulators that you mentioned, and also the central bank with stablecoin regulation. And then it's the bottom up as well, with more companies moving here, setting up here, growing the whole ecosystem. So that has certainly helped.
So let's talk about stablecoins. You mentioned the central bank came out with some guidance not so long ago about stablecoins in the UAE. The UAE arguably now is a big crypto hub. Do you believe also we'll see the UAE as a hub for stablecoins with this latest legislative regulatory initiative?
So that's a really great question. It also sort of ties into the sovereign wealth fund piece and what they're doing in the space. With the launch of the AE coin last year, it's, because it's backed by the central bank, fully backed by reserves, full on-chain transparency, that's going to give a lot of investors comfort in this space. And we've also seen announcements from corporates that will be actually using this. As you know, stablecoins are only as valuable as utility value, how many people are actually utilizing it. On the sovereign wealth fund side, I think it's very interesting with the announcement from ADQ, IHC and FAB launching their own stablecoin, which will also be regulated by the central bank. There's a big philosophical debate about whether sovereign wealth funds should issue stablecoins. There are many advantages. You look at it, it's like classical liquidity management, right? You issue a portion of your liabilities at interest-free, you invest that at the risk-free rate, you increase your return on equity. Secondly, sovereign wealth funds here have high credit ratings, they're trusted by the public, investors will feel comfortable. They also have the resources and the means to actually manage the risks internally. And also they have this direct line of communication with the central bank, which will help on the capital flight and the stress on the currency peg. One of the issues, and we can talk more about this as well, is the risk of fragmentation.
Yeah.
You know, fragmented networks don't work in any situation, especially stablecoins. And so if you don't have interoperability, you lack liquidity, no one's really going to want to use your stablecoin, which is why this combination of IHC, ADQ and FAB is so interesting, because FAB is one of the UAE's largest banks.
Yeah. So I see your argument is, first of all, this is a way to solve that issue. If there's too many stable coins in a country like UAE, obviously that creates a lot of issues. Arguably one of the reasons Tether is so popular, because it's become the dominant, it gained that large market share on that perspective. The other argument we can argue as well is whether the sovereign wealth funds getting into crypto is a competition to the private sector. It's a kind of unfair competition if it comes, especially on a credit rating perspective. But Rachel, to what extent do you believe some of the developments we are seeing in the U.S., in particular with the Genius Act, could be a catalyst for this? Or you think that as a ship sailed already and the UAE is a bit late in this game?
That's a great question. I'd also love to come back to the point you made about the sort of crowding out of the private sector in the UAE. I think when you look at the global regulation, it goes back to this fragmentation point. So the US with the Genius Act and with Crypto Week is now really encouraging private sector innovation, and it does show the open stance that the current US administration has towards crypto. Then you have the euro, which has a more sort of controlled sovereign approach, exactly. And so what I think is really interesting for the UAE is that opens the door with this diversion elsewhere, is you're going to see local and regional champions, and my belief is that the UAE will be one of those. Back to the point you made earlier, which I think is super interesting, is I think one of the biggest risks is actually now crowding out from government-linked entities to the innovation we're seeing in the private sector. Let's not forget that if you look at IHC, ADQ and FAB, then you have Mubadala, which owns 38% of FAB, and the Abu Dhabi ruling family own 18% of FAB, and all of a sudden you have this consortium of government-linked entities which control $900 billion of assets. What's that going to do for private sector innovation that we've already been seeing?
I mean, we've seen that in the mining sector. For example, when state nations like Bhutan, El Salvador started getting into mining business, when your electricity cost is zero, it's a bit difficult for private sector miners to compete on that side. One last question before I let you go, Rachel. Especially, I want to just pivot to what your company, 3iQ, is doing actually when it comes to listed tokens. You guys launch ETFs on XRP, Solana, and others. To what extent do you believe these single token listed ETFs could be competitor to, let's say, there's a single token out there? From a customer perspective, do you believe there's still a big market of customers that want to go buy the single token ETF versus just going to crypto exchange and buying the token directly?
That's a great question. I really think it comes down to, obviously, the appetite from the investors. Who feels most comfortable holding that risk? Do they want to apportion that risk, or I guess that trust, to a regulated entity? So I think the key thing about ETFs is that it is bringing more investors into the space that might have been sitting on the sidelines, that weren't comfortable with managing their own keys, managing the custody and managing all of that. I think the recent ones that we've done, obviously when we launch a new single name ETF, there's a few things we have to consider. Firstly, obviously the regulators need to be comfortable. There's a myriad of things they look at, including institutionalization of it and liquidity, but also is there pent-up demand for it? I think we've already seen this with our XRP ETF launch. Within the first month, it's over $50 million, which shows there was a lot of demand sitting on the sidelines.
Exactly. We've seen it already with the Bitcoin ETF as well, being the most successful ETF in history on that perspective. So a very interesting topic, Rachel. That was Rachel Pether, the head of MENA at 3iQ. Thank you for being with us today. Thank you for joining us on Crypto Weekly.